we have a new kid on the block, but you cannot call it a kid on the block. Actually, it's a giant on the block that has actually listed on the bourses today, and that is Hyundai Motor India. They have listed on the bourses. It was a muted open coming in for that particular counter. But what's the way forward for the company now that it's a listed entity right here in India? We have Mr. Tarun Garg, who's the Chief Operating Officer at Hyundai Motor India, joining us on the show. And along with Tarun Garg, I have my colleague Anurag Joshi as well, who's joining us on the show.
Hello, Mr. Garg. Congratulations for closing India's biggest IPO and listing on Indian exchanges. So in terms of creating a long-term shareholder value, what would Hyundai India's plan be? You had a very tepid response today at the opening. So how would you turn around the shareholder perception in the long term?
So if you see, Hyundai has been in India now for more than 26 years, and we have been the second biggest auto OEM in the passenger vehicle space. Going forward, our growth strategy is very clear. So if you see in terms of sales, we believe in quality of growth. So, which means that not only volumes, but also profitability and market share. The second is, of course, the capacity expansion. So our current capacity is 824,000. However, we have acquired the Talegaon plant, which will give us a 250,000 capacity and take us to 1.1 million capacity by 2028. The third, of course, is a big focus on exports along with domestic. So if you see, we are the hub for the emerging markets. We are exporting currently to 80 plus countries, and 20% of our production is exported. So I think going forward, this is a very strong lever which we have. In terms of electrification, we have already announced that Creta EV is going to be launched in the next quarter, followed by 3 more EVs in the mass and the mass premium segment. This EV plan is being also being backed by a very strong localization. So as we speak today, the battery packs are being localized in Tamil Nadu. Going forward, we are looking at LFP cell manufacturing with a local Indian partner. We are looking at powertrain, drivetrain and power electronics as well. Also the charging infrastructure. So which will again be a growth driver moving forward. As we all know that India is at an early stage of electrification, and Hyundai wants to really play a big role in terms of really taking this lead in really increasing the electrification. On cost optimization, our record is very good, and we intend to really pursue all efforts to really further reduce the cost. And last but not the least is the premiumization, the featureization. As Indian customers become more and more aspirational, not only are we seeing that the SUV penetration is going up, but also the featureization, the top trim percentages, the ADAS, the connected cars, the sunroofs. All these things are adding to the not only to the volumes, but also to the high trims and also to the margins and profitability. So I think this path will really pursue, which we intend to pursue, will help us in creating long-term shareholder value, going ahead in the Indian market.
You've spoken about the EV localization. Now, how do you want to take this forward in terms of making India an export hub for Hyundai's EV vehicles, and also building up on the EV platform and also on the EV goals? Can you tell us more?
Yes, surely. If you see that, like I mentioned, that Creta is a very strong brand, and we believe that Creta this will be a strong entry in the high volume EV space, and then following it up with 3 more models, and along with localization, which will help us to position these EVs very well. If you see our track record, it has always been like that. We introduce a product in the Indian market, make it successful, get economies of scale, and then we become, we look at the export opportunities. And this is what we have pursued over the past 26 years. So in the EV space as well, currently we are exporting to 80 plus countries. So we will see wherever there are opportunities in terms of exporting the EVs, we will definitely look at those opportunities going ahead.
You have very high hopes, very high expectations from the EV Creta. In terms of the pricing point and in terms of competition, how do you see it fitting in the Indian market?
So if you see, look, Hyundai has always been ahead of the curve in terms of introducing new products with modern and futuristic technologies, and also bringing a great value to the customer. So I think this is in our DNA, and we will pursue all efforts. And I already mentioned about localization, which will really help us to position our cars well, both in the IC as well as in the EV space as well.
You also spoken about making India an export hub, and you want to increase exports out of India. Going ahead, which are the countries Hyundai Motor India will be looking to export car to, and specifically EV cars? And over the long term, how much would the, right now, I believe the mix is 80-20 domestic and exports. Do you see this mix changing in the future? You've made plans of increasing exports out of India, but do you see the the domestic sales and export mix changing over the long term? Mr. Garg?
I believe we've just snapped that line with Mr. Garg of Hyundai Motor India. We'll try and reconnect that. Just to recap, what he had to say is the fact that they are having huge hopes and trust on the EV Creta model as well. But I believe we have Mr. Garg joining us back. Mr. Garg, in case if you want to...
Can you hear us? Mr. Garg?
Yes, I can hear you.
Yeah.
Can you hear me?
Yeah, absolutely.
Yeah. So if you see our revenues from the export market is currently 23% and domestic is 77%. In terms of volume, it is 20-80. We are exporting to 80 plus countries across Middle East, Latin America, Central America, Asia, Africa. We believe that these economies, these countries, the preferences are similar to the cars which we produce in India. With the Talegaon plant and the additional capacity coming in, I think this will give us more opportunities to increase our volume going forward. While it will be very difficult for us to really give, okay, what would be the percentage going forward. But as you have seen in the past, Hyundai has always big time focus on exports. It gives us great foreign exchange, and our currency is dollar, which also makes us more stronger. So we believe that opportunities are only going to go up, with Indian plant being very, very efficient, and we intend to really leverage it with the capacities going up.
Of Hyundai Motor Company was this the morning for the listing. So in terms of the goals, in terms of the long-term plans that the global leadership has, what are they? Can you share that with us?
Is the third biggest market for Hyundai Motor Company outside of US and Korea. So India is very important. Point number two, that we are the first country outside of Korea to get the listing. So very clearly, India is a very important market. The plan going forward is to improve the R&D capabilities even further, not only for India, but also for the other emerging markets. So India plays a very, very important role because of our demographic mix, because of our high market share in India, because of the success which we have got in India all these years. And now IPO is giving us another opportunity to further Indianize and make Hyundai as one of the most trusted brands in India. So the HMC leadership is very, very optimistic and upbeat about the Indian market, the Indian economy with the GDP going up, the demographic population, and of course, HMI's performance all these years.
Hi, Mr. Garg. This is Anisha also joining into the conversation. Earlier, there was a limitation that you couldn't talk to us about future-looking objectives just ahead of the IPO, but that has been lifted now. So I expect some more color on the future viability and the vision that you have. And I ask you that because analysts are pegging in that the volume CAGR for the next 2 years is likely to be around 8%, and that would drive the profitability for the next few years in the range of 15 to 20%. I know you can't give me exact number, but directionally, would it be off the mark to expect just a high single-digit kind of volume growth, or you're expecting it to be at least double-digit?
Look, to forecast the future is always very difficult, and I will not like to really stick my neck out and try to forecast the future. What is more important is what is our strategy. I think that is very important. And we intend to pursue this strategy of quality of growth, the focus on domestic and export, electrification, the cost optimization, the capacity expansion as a strong margin and volume lever going forward. So I think these are the things which will really help us to really maintain a strong volume as well as profitability. But I will not really like to give you exactly that what kind of growth in profit or volume we can expect in the next couple of years.
The shareholders are joining in the conversation. Just lastly, wanted to understand about the parent company, Hyundai Motors shareholding that is there in Ola Electric. Should one read between the lines? Will that have anything to do with the India business as well and the plans of Hyundai Motors going ahead?
No, that is an HMC investment, so I have no comments to make on that.
Before I let you go, the royalty rate, that's a bit of a black box and people are trying to figure that out as to which end it will go towards. Right now, I understand around 2.5% is where you're at. Street is expecting it to go up to around 3.5% going forward. Any clarity there?
Look, we pay a rate of 3.5%.
Okay, it was expected to be an important answer, so we'll try and reconnect if Mr. Garg can actually take back that question for us, because royalty, of course, is one of the reasons you have that downgrade coming in from MK also this morning. They're raising that as a bit of a red flag, that there is expected to be higher royalty costs going forward. What the management was talking to us about was that 3.5% of the revenue is what they are perhaps paying right now. It shows in the financials as percentage of revenue of around 2.2, 2.4%, but what's the way forward is something that Mr. Garg was talking about. Sorry, could you please complete your answer? We lost you there.
3.5%. Of course, we get access to all cutting edge technologies, whether it is electric vehicles or going forward, any kind of technology which we will have, the brand, etc. And I want to just put it on record that the Q1 financial year 24-25, which are already a part of the RHP, already include the higher royalty rate. So I think this is something which I just want to clarify. So Q1 financial year 24-25, which is April to June period, financial year 24-25, it includes the higher royalty rate. So this is what I want to say. I think it makes things very clear.
All right, point taken. Thank you so much, Mr. Garg, for patiently answering all the questions as well as talking about the royalty, talking about the growth forward going ahead for Hyundai Motor India. Thank you so much, as well as once again, congratulations for being a listed entity right now. But with that, we're totally out.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.